Today is January 15th, 2026. So I would also like to update my buying strategy for this year. So at the beginning of this year, we came up with a buying strategy combining the signals of KDJ Golden Crossing together with SAR uptrend buy signal. So we were not really differentiating the stocks from having these signals. So therefore at the beginning of this year, we saw a lot of the stocks were presenting these combinations of signals. So then what really to buy at that time. So therefore, we now, after 2 weeks of trading, we come up with the conclusion that we should not just randomly pick any stock that presents that combination of signal, but rather we should pick those sectors that are just going to perform better than the others. So therefore, we can have a better band of our bucks with the same type of signals showing, but some are just gonna perform better than the others. So therefore, I'm just gonna give you a few mistake signal that I have bought. So for example, I cut loss at MYGN. So this one, you see that at the beginning of this year, January 6th, right, it was presenting exactly that buying signal we have described. So firstly, golden crossing right here, and then immediately the next day, the SAR uptrend buying signal showed up. And we bought this day, but then immediately soon we realized that we have to cut loss, right? So we could have used this investment on some of the other much better performing sectors. So therefore, we asked Grok to give us some of the better performing sectors this year, right? So the first one that it shows is basic materials such as commodities, right? Like copper, gold, silver. We know that it has been having a crazy run, right, for all of these metals. And overall sector YTD return is 11.75%, which is much higher than the general SPY. And the notable examples for these sectors are like mining firms like Freeport, McMoran, chemicals, and so on. And then we're gonna give a few tickers later. So this one significantly outperforms, right? Communication services. It's going to have a high return from global economic recovery and inflation hedges, and also with the recent geopolitics risks and so on, right? And then the second one is industrial. Industrials, um, it's going to benefit from the infrastructure spending, manufacturing rebound, and aerospace defense growth amid geopolitics tensions, right? So, um, the examples are like the heavy equipment, like Caterpillar, GE Aerospace, transportation like FedEx, and also the next sector is consumer defensive staples, right? So um, it's going to have a stable demand for essentials amid economic uncertainties, benefits from lower rates and consumer shifts, with examples such as P&G, Coca-Cola, Walmart, and also the example we gave yesterday, the CELH. So the CELH ticker, it actually not only did not drop during the 2022 bear market, but it actually went up. So this is a really a good defensive play in case of a market downturn. And then the next one is energy, like oil, gas, right? Such as geopolitical risks in the recent Middle East tensions. But personally, myself, I'm not particularly interested in this sector. So for this year, I think I'm just gonna skip this sector. And the next one is consumer cyclical, such because it's gonna benefit from consumer spending recovery, e-commerce growth, and rate cuts boosting the discretionary purchases, with examples such as Amazon, Tesla, and Disney. And then the next one is healthcare. For myself, I think I just right now have way too many healthcare already, but there are some good examples such as Eli Lilly and Pfizer and J&J. So personally, I'm actually going to start purchasing J&J when it drops. Will have some kind of correction. And there's also financial services because of more friendly interest rate environment and banking resilience, because we know that yesterday or something JP Morgan actually had a really good earnings report or something, and Goldman Sachs and some